Hi everyone, and welcome back to the Simplify LLC channel. Today we are going through a step-by-step guide to adding a member to your LLC. Please remember to like this video and subscribe to our channel to get notified when new helpful content like this video is added. All right, let's get started. Now, when you have a small business, you have to be ready for changes, including the need for help to scale your business. This help may come in the form of time, money, or advisory. But if your cash flow is tight, you may have to get creative to find a way to compensate them. One common way is through an ownership stake. Now, before you add a new business partner to your LLC, you must consider the legal and operational implications. While we can't provide legal advice, we are providing some general guidance. But remember, there are several complicated tax and legal issues, so consult an attorney before completing the process. If you've already agreed to the terms of the deal, here are the steps involved in adding additional members to your LLC in 5 steps. You could either add a partner to a single member LLC or a multi-member LLC. Most of the steps are the same, but we'll lay them out for both here. First, you'll need to review your operating agreement. This is an excellent time to create one if you don't have one. The operating agreement will govern the internal operation and management of the company. It covers operational decision-making, expansion, profit and loss allocation, and ownership changes. Remember that if you currently have an LLC operating agreement, you need to review the terms laid out in that agreement about adding new members. These terms will detail adding a new member, including voting rights and percentages. Next, you'll decide on the terms of the LLC operating agreement. Discuss that your new member will be sharing both the benefits and burdens of your business. LLC members influence the company's direction, vote on business decisions, receive income and profits from the business, and share responsibility for business obligations. You'll detail the allocation of these things in the operating agreement. When crafting your document, you need to spell out capital contributions to the LLC, service contributions to the LLC, membership interest in the LLC, allocation of profit and losses, distributions, tax provisions, reporting responsibilities, identification of managers, access to records of the LLC, voting rights, management structure, admission of new members, withdrawal of existing members, transfers of interest, remedies for failing to follow the operating agreement, procedures for how to resolve disputes between members, and dissolution of the LLC. Now, when it comes to splitting ownership of an LLC, you can change the ownership structure after liquidating a current member's interest. How you split this ownership is up to you and the other members of the LLC. After figuring out the terms of your operating agreement, you will vote on adding the new member. Record the outcome and keep it on file. After voting, amend the operating agreement and file the paperwork with the state to add the new member. Great. So, how do you vote? When vital decisions are made, it's essential to have a written resolution signed by all members in favor. It doesn't have to be a very formal thing. You just need to know who is in favor and against it. So, can some LLC members not have voting rights? Sure, voting rights can be restricted to certain members called managers. This would be in the case of a manager-managed LLC. They can be members of third parties and are responsible for running the business's day-to-day decisions. After amending your operating agreement, you'll file the amendment to the Articles of Organization, depending on your state. Check the local requirements in your state. Now, after making this change, see if you need to update your tax documents, as adding a member has tax implications. If you were initially a single member LLC and added a member, you are now treated as a partnership for federal tax purposes. This doesn't apply when adding a spouse as a member in a community property state. Remember, as a sole proprietorship, your business income is reported on your personal tax return on a Schedule C. When you add the member, you will begin reporting income on a partnership tax return on a Schedule E. Depending on the type of business you operate and how you want to distribute profits, you can also choose to be treated as a C Corp or an S Corp. Now, if you're adding a member by selling a portion of your LLC interest, you'll have to report the transaction on your individual tax return. If that new member receives an equity interest in the LLC, they may also have to report it as a taxable transaction for the value of the interest received. Well, that's all the time we have today, and now you are ready to add members to your LLC. If you found this video helpful, give it a thumbs up and leave a comment. Also, don't forget to check out the channel for more help simplifying your LLC. Thank you, and we will see you again real soon.